Hello, fellow traders. 'Tis I, the rumpled one. It's Wednesday, January the 3rd, the year 2018. Yesterday, I went past my 15-minute limit, so we'll have to have part two. But as I think about it, I should probably have at least a part three and maybe even a part four. Starting the new year, beginnings. New Year's resolutions. Maybe you made some trading resolutions like you're not going to let a winner become a loser, even if it's only for a half of a pip, 5 points. Maybe you decided you were always going to have your stop loss. Always. You'll never trade without a stop loss. Or you only take certain trades, or you only trade one direction, or you only trade one pair or two pairs. You won't be distracted. You'll follow your plan. All kind of resolutions. But you're human, and chances are you'll probably break one before the week is out. So you have to ask yourself, why do you do that? And then stop it. So sometimes it's really good to come back to the basics. Speaking of basics, money and risk management. Once again, I've put out a few videos on it. And then somebody out in YouTube land was asking me about why I hadn't written a position size indicator. It's like, I wonder why they thought I hadn't. Just because I didn't mention something, don't assume that I didn't do it. I didn't code one. I've learned it's better to ask a question and then get the answer than it is to make an assumption. It just really is. Oh, we're looking at the chart here, and we can see how prices moved on the weekly. You see it went up there, and now it's back down to here. And one of the things about trading that you have to realize is that trading isn't what you may think or believe that it is. I mean, if you really distill it down to the crux of the issue, and you think about it in terms of 0, 1, 2, or 3, you might understand it a little bit better. Why do I say 0, 1, 2, 3? Well, if there's nothing, then there's nothing. So that's something you have to understand and account for. If there's 1, then it's either going to be 1 or nothing, like binary, computers, zeros and ones. Now, if there's also a 2, now there's basically 3 options. Okay? Now, some people can say 3 is basically adding 1 and 2, and they'd be exactly correct. But sometimes I like to look at 3 as a separate and distinct entity, because when you have that third positive, then you can have different interactions. So, for example, take a deserted island. You start out, there's nobody there. It's deserted. And then one person maybe was shipwrecked or something, and they inhabit the island. So now there's one person. Then you get maybe somebody else swims ashore. Now there's 2. Totally changes the dynamic. And when you add that third person, now you can have things like a majority. Whereas before, you only had 2. And then so it was like you either had agreement or you didn't have agreement. It was like deal or no deal. So if you think about trading in those terms, it might clear things up just a bit. Now, along those lines, what exactly is trading? Now, I know it's buying and selling, but when you trade, what is it exactly you're doing? And what is it you're thinking? Well, when you enter a trade, let's just say right here, you entered this trade, you took that breakout of last week's high. So when you put your trade on here, what you are saying, what you are believing, maybe what you are hoping is, well, one, the price goes this way. That's one thing you're hoping. And you're saying you hope price goes this way before maybe price goes this way. Say if you were doing this and you were doing a wick zone trade, okay, here's the candle top, here's the candle high. So you're thinking, you're hoping that once it hits here, that it goes up here and you'll be able to take a profit before it comes here and hits your stop. So that's what you are hoping, wishing, desiring, okay? And the thing is, you can't make it go here. You have no idea. It could have gone way up here. It could have only gone a little bit. You have no idea, once you put that trade on, how far that's going to go. You might think you know, but you don't. I mean, you can scrunch the chart in and go, well, you know, maybe it's going to break this high. See, let's see, it broke that high. So you're thinking, So in this case, if you just put the crosshairs there, you can see, okay, it broke that one previous high a few bars ago, but it didn't break the other one. Now it came back through. Maybe I should take my profit off the table. You see, when you break things down, it becomes simple. So once again, you put a trade on, you are hoping it goes in the direction that you're trading versus going against you to a point where you say enough is enough. And that's what you're doing. Now, people say, well, trading isn't gambling, and gambling isn't trading. Trading's not gambling. But you see, once again, you're looking at things from a limited perspective. You know, when you have two people, some things you're going to agree on and some things you're not. And so what that means is, if both people agree, then you have an agreement. If both people disagree on something, then there's no agreement. But if they agree about the difference of something, then you also have an agreement. So when you get into arguments, discussions, battles, conflicts, one side is usually going to say, well, it's like this. And then the other side's going to say, no, it's different. And you're never meeting. So what you have to do is you have to take some time and go, okay, let's both talk about what's similar about this, whatever the subject or matter is. And then you say, okay, now we're going to take some time and talk about what's different. Well, you see, in trading, buyers think price is going to go up, so they buy. And sellers think price is going to go down, or they sell. Or, in the example, if you're short, you might be a buyer even though price is going up, because you're saying, well, I don't want it to go up any farther and I'm going to stop out here. Ditto for sellers. You might sell because, you know, it's gone down too much. So the point being is that trading is that argument where you have one people saying, well, it's like this, and other people go, no, it's like that. And so like when we start discussing things out in YouTube land or on trading forums, or if you call me up or in my Pal Talk chat room, the 2% Club, which is free, by the way, so in case somebody's watches this video on some forum, don't think I'm trying to promote anything, because I'm not. So once again, same, different. So just remember that next time you're arguing with somebody, or say, hey, let's argue a little bit differently. So you want to talk about the differences? We'll talk about the differences for the next 10 or 15 minutes, and then it's my turn. Well, let's talk about the similarities. And so this way you try and have an understanding. Each side tries to understand where the other one's coming from, and hopefully you can figure things out. So let's just flip through these screens. Okay, we've got the euro. See, there's still a gap here. See, it didn't hit that close. Maybe by the end of the week it will. And ditto for the CAD. Has a gap that hasn't filled. Let's move down the charts. Okay, we've got the daily chart, where you can see right now it's an inside bar right here, inside bar. Okay, close minus the open's 30. And then if we go back to the weekly chart here, you see on the weekly we've got 19 above, but on the daily we've got 30 below. And you can see that here. We've got some nice ranges on a few of these. We've hit the 100 pip threshold. You can see the yen and the CAD. They're pretty much just sitting there not doing too much at the time. And FOMC comes out later. Maybe that's part of the reason why. Looking at the buy zone, maybe if you triggered there, you stopped, got back in, maybe you took some heat, then time to exit, especially here looking at price action. Daily open cross, not much happening. See, rather than take the cross, take the buy zone. See here. Now, that's why. You can take the cross, or you can wait for the buy zone. See, people say, well, if you trade this, you're going to get whipped around. Well, yeah, but if you trade here, usually you'll see price will have to move because that's what creates that range once again. And the range is usually bigger than 20. And so from here to here is 20, because from here to here is 10, and here's 10. Range is almost always bigger than 20. Range, there's a 24, 26, and a 22. As I just stated, range is almost always bigger than 20. And that's the buy zone. And we're looking at the rat zone. You see here in the early part of the day, these zones don't even really exist. They're overlapping. But see here, it came down and bounced. Now we're going this way. There's a nice red rat, green rat reversals in here, price action reversals, and you could actually be up 10 pips or more had you taken one of these. And for those pivot point traders, we see here we open above the pivot and it hit the pivot right there. So those pivot point traders once again were profitable. In fact, it's come down to S1, so maybe you took some of the profit off there. And what I'm talking about for those just joining, pivot point fade, open above the pivot, trade toward the pivot, open below the pivot, trade toward the pivot. And price action, we can see right here in the past hour, we've got a red higher low, broke that high, and there we go. And for those just trading simple horizontal lines off the sweet spots, green candle at the line, and you'd be up 10 pips. And by the way, those traders that have written me either via email or on the forums or on YouTube, thank you for the compliments. And those of you who are saying you've been profitable, that makes me happy. That's my point. I'm trying to help fellow traders become profitable. And as you can see here, the wick zone price does not like to stay in the wick zone. And you can see here the holo, highest open, lowest open, bam. Now I'm starting to sound like John Madden again. Oh, just my trade reminder, just telling me some of the things I should be looking at. Pivot point, previous mid. One of my rules of thumb, open above, previous midpoint, I want to go long. Oh, and for your squigglies, there you go. Okay, fellow traders, it's not what you trade, it's how you trade it. The Rumple One signing off to drain the banks with about 2 seconds left.